Hello traders, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts and market structure 101. So let's get started, and as usual, cheers. Here we have episode number 38, which is a crypto instrument this time, Sandbox, or also known by its symbol SAND. If you aren't familiar with the series, don't worry, I'll make sure to attach the entire playlist, which includes all the videos by order, in the description below. And I also attach my Telegram channel, where I forward the videos and analysis from TradingView and YouTube, in case you want to get notified. So let's do it. But also already know we always start from daily and weekly, which we call our rejection timeframes, to know where we stand in the market. Are we overall bullish, bearish, or stuck inside a range? And as price approaches the lower bounds, we'll be looking for buy setups, and as price approaches the upper bounds, we'll be looking for sell setups. We've got three types of rejections: a support and resistance, where we have many failed attempts to break above or below a certain level or area; a supply and demand zone, where we have an aggressive movement upwards from a certain area, that's a demand, and we'll be looking for buy setups on the retest; vice versa, when we have an aggressive movement downward from a certain area, that's a supply, and we'll be looking for sell setups on the retest. The third type is a trend line, which is basically a non-horizontal support and resistance. So let's find our rejection areas from daily and weekly. Then we can zoom into lower time frames if we don't find an entry from daily and weekly, especially for crypto, because I always go for the higher time frames. Then if you don't find anything from daily for the entry, we can zoom into H4 and so on. So first, and as you can see, we can't really find typical supply and resistance here because we don't have enough data. That's why we go for the previous high, round number, supply and demand zone, and trend lines. So, but anyway, if you zoom a little bit in, we can see that we got this high here broken downward. So it's now acting as a potential resistance. As you can see, price rejected downward. We can see it even better when we zoom into daily time frame. Since we can't really find much except of this demand zone, let's zoom into daily time frame, right? Anyway, let's do the analysis from scratch on daily. If you zoom a little bit out, we can see that we previously were in a bullish trend. We've got our impulse, correction, another impulse, correction, and so on, right? So we can clearly see that the bulls were very strong, pushing higher, and not even letting the sellers make, or the bears make, a classic correction, because we usually in a bullish trend would have a movement like this. When you see the impulse movements are very big and the correction is very small and not a classic one, or even a flat correction, just like this one, as you clearly see, and this one, we know that the bulls are still very, very strong. They are still in full control. Okay, so now we were overall bearish previously, big impulse, small correction, big impulse, small correction, until price hit around this area, which is also around number 9 and 8, and then broke below this previous low. So now we are technically bearish. We have a shift in momentum from bullish to bearish. We can also draw a channel and so on lower time frames, but let's stick to the daily time frame. So starting from here, we have a shift in momentum from bullish to bearish, and price started to make lower highs and lower lows, right? So we've got this big impulse movement, and we are currently in this correction phase. When we are overall bullish, we'll be waiting for the correction to be about to end to catch what? The next impulse movement up. So we are waiting for this to happen. However, we can't really know where the correction would end. It might end here, it might end immediately, just like this one, for example, or it might dive lower and deeper before trading higher. So we might still see this movement before we trade higher. That's why, even though we are overall bullish from a long-term perspective, we don't buy blindly. We always wait for extra confirmation and trigger. Of course, inside this trend, we could look for sell and buy setups, right, at the end of the impulse and correction. However, for this video, we'll stick to the long-term view. So for now, we are bearish inside this correction. After this big impulse, the bears took over to start the correction, starting from here, after breaking below this low and then rejecting it because it's acting, as mentioned previously, as a potential resistance now, right? It was acting as support, broken downward, now acting as a resistance. The same like logic can be applied here. This is a low, broken downward, right? Now it's acting as a potential resistance, and vice versa. is a low here, broken downward. Now it's acting as a potential resistance. So we can clearly see that the flow of sand lately, that we are now bearish. However, the sellers are exhausted and they couldn't push any lower. So we've got this impulse, a correction, an impulse, also a correction. As you can see, the correction is getting bigger in size. Then we got this next impulse, which couldn't trade any lower, couldn't push lower as just like before. So previously had a low, a clear one, right? Really lower, and look at this one, couldn't make a low, instead made an equal or even a higher low, which give us an early alert that a potential reversal might happen. Doesn't mean that the bulls took over yet. It means that the bears are exhausted and couldn't push lower. We might have a trend continuation, right? It can be just a correction before another bearish impulse movement to start, but for now, we know that the sellers are tired. They couldn't push lower, waiting for the bulls to take over by breaking above this highs. We'll check it out in a bit. So this is what we know from a market structure perspective. Now let's try to draw our rejection areas to know where we are in the market, what we are looking for, and so on. We know that the sellers are exhausted, but let's see if it's around a rejection area. And you clearly see that it is. It is around this demand zone, right? We have an aggressive movement upward from here. It's a rally and a base, then a rally again, right? So let's make this one in green. And we also got another one, which is around this area, which is the lower bound a demand, because we also had an aggressive movement up from it. Let's make this one in blue. Okay, I'll try to make it smaller and like for them to be like similar to each other and like end at the exact same area. Like that's how I like to keep my chart as clean as possible. So these are our rejection areas. What we know so far is that sand is sitting around this demand rejection while looking for buy setups on lower and higher time frames. Unless it's broken downward, then the support, because like we've got many rejections from it, which is also a demand zone, which is this big demand. If broken downward, then our support would become a resistance, just like here, and we can expect a drop even lower to around this demand area where we'll be looking for new buy setups to form. For those who traded on margin, can look for sell setups on the retest of this area, once broken downward, of course. For now, let's take it step by step. We know that this one is going flat. We were bearish previously. We were trading inside this channel. Let's make it blue, make an offset for it. Fantastic. So we're trading inside this channel. We were clearly bearish, but starting from here, as mentioned previously, price couldn't push lower, made a higher low, then broke above this area. So now we are going flat. But again and again, doesn't mean that the bulls took over yet. Next, now if we want to draw something that engulfs the current price or latest price action, we can see that price is now flat. So let's try to draw a pattern or anything, or even a horizontal range, which engulfs this overall pattern. And here we go. We've got this upper trend line, and we can even draw this lower one, so forming like a symmetrical triangle. And I posted this picture analysis on TradingView just now, but now you know how we did it and why we did it, what we're looking for. So we were bearish, now inside a range. So we usually will get a bearish movement, a range, and then a bullish movement, then a range, then a bearish movement, right? Of course, it can also sometimes be a bullish movement, a range, and then a continuation. Okay, so this is what we are waiting for the bears or the bulls to take over to decide like which side we are going to be on. If it's a continuation, then we'll be looking for buy. If it's a reversal, we'll be looking for sell. Always wait for the market to make the first move and then react accordingly. So now we're trading inside this consolidation, waiting for the bulls to take over again. This is our last major high, which is from daily time frame, and that's why we'll be waiting for a break above it. I also make it in gray. And so now from a long-term perspective, we'll be waiting for this break above this last high for the bulls to take over from a long-term perspective, because clearly if you want to compare the major highs, of course, if you compare the minor ones, we can see that the bulls took over here from a short-term perspective, took over here as well, and so on, right? But for if you want to compare the biggest and major highs, we can see that here we go. The impulse movements are getting smaller and flat, and they are not being broken yet. So lower high, and lower high. This is our last high. So we're waiting for the bulls to break above it to confirm that they are now finally strong enough to make another shift in momentum, and this time from bearish to bullish. In this case, a bullish move would be expected, and price would start to make higher highs and higher lows. Of course, for like the targets, that can be the first one can be this, which is a resistance, support, resistance again. So now it's acting as a resistance. So the bulls need to break also above this one. But let's keep it simple for now. Let's take it step by step. Now, if you want, you can also zoom into lower time frame. I don't want to see these ones. I don't want to see this one. Fantastic. I would like to see this one on H4. So you can zoom into lower time frames and look for buy setups here from a short-term perspective. Just like previously, we're bearish. We're going to leave this high, trade it higher, then broke below the previous low, trade it lower, right? Now we are breaking above the previous high, so we could look for buy stops around this area because price is sitting around the lower bound, lower trend line, and a demand zone. Knowing that, sand can sit a little bit lower before trading higher, or if it breaks it downward, then a movement till our next rejection would be expected. So that's it for sand from a long-term perspective and short-term perspective. This is from a long-term one, and now we're looking for basket tops on lower time frames as well. Best of luck, and I'll see you on the next episode.